Good morning, viewers, and welcome to this edition of the Market Review, where we bring you developments in the financial and capital market as relates to the economy. Today is Friday, December 18, 2020. It's been an eventful week, and what a good way to wrap the week up as we brace for an interesting weekend. Today, we're looking at the unlisted OTC market as an alternative source of financing in the economy. And let's give you the outlines for what we'll be discussing today. Big story from the Securities and Exchange Commission of Nigeria as it commences its master plan review. We'll bring you excerpts from the Securities and Exchange Commission and House Committee on Capital Markets visit to the NSD PLC. Senate has passed its Finance Bill 2020. What are some of the implications there? And we'll take a look at the review of week 50 performance of the NSD market and some insight into why the unlisted securities market is a viable platform for financing in Nigeria. Let's kick off with the fact that in the course of the week, the House Committee and National Assembly Committee on Capital Markets, the House Committee level, visited the NSD PLC alongside the apex regulator, the Securities and Exchange Commission. There are some interesting developments that occurred in that visit, and that's part of what we'll share with you. But the first major thing we would like to say is that the Securities and Exchange Commission, as part of its commitment to develop a robust capital market with the support of FSD Africa, has begun its master plan review. The Securities and Exchange Commission and the financial sector deepening FSD Africa announced yesterday the start of a joint review of Nigeria's 10-year capital market master plan to support the country's economic resilience amid new economic challenges, including lower oil prices and the COVID-19 pandemic. The review of the capital market master plan will see SEC Nigeria work with FSD, Africa's regulator support program, to develop a revised 10-year capital market master plan that will strengthen Nigeria's capital markets and their capacity for capital mobilization. The CMMP provides a vision for Nigeria's capital market as well as a roadmap with objectives to meet it. The process will involve an assessment of progress made since the plan's implementation to date and engaging with stakeholders for input. This will result in the introduction of more stringent tools to measure the plan's progress against objectives and the inclusion of new challenges, opportunities, and risks related to the current environment into the plan. The review of the CMMP comes in response to changes in economic and market circumstances upon which the plan was originally based on when launched in 2015. That needs updating to match the current environment. This includes the effects of lower oil prices on Nigeria's economy as well as a slowdown in economic activity due to the COVID-19 pandemic. The introduction of new initiatives and products will help to improve the liquidity and depth of Nigeria's capital markets. FSD Africa's support comes as a part of its ongoing multi-country program to strengthen Africa's capital markets. The program is centered on the development of capital markets master plans, conducting institutional capacity assessment, and also improving capacity for sustainable finance, such as green bonds, helping markets to adapt to the operating climate. Evan Sosano, Director of Capital Markets at FSD Africa, said this review will give market stakeholders in Nigeria a unique opportunity to not only take stock of the plan's results so far, but also to grow and respond to previously unforeseen economic developments. As FSD Africa continues to play its role in sub-Saharan Africa and partnering with it to enable the strength and growth of its capital market and economy. On his part, Dr. Lamido Yuguda, Director General of the Securities and Exchange Commission, said the implementation of the Capital Market Master Plan is core for SEC and will help deepen the market and improve the capital market's contribution to the economic growth and national development. To this end, he said the review of the CMMP better positions SEC to deliver on these objectives in these very challenging times. The FSD Africa and SEC Nigeria's laudable partnership underscores the mutual goals to build financial markets that are robust, efficient, and above all inclusive. FSD Africa is a specialist development agency working to reduce poverty by strengthening financial markets across sub-Saharan Africa. Based in Nairobi, FSD Africa's team of financial experts and analysts work alongside government, business leaders, regulators, and policymakers to design and build ambitious programs that make financial markets work better for everyone. It was established in 2012. It's incorporated as a non-profit company limited by guarantee in Kenya. It is funded by UK aid from the UK government. So interesting prospects for Nigeria's capital markets, if you'd ask me. The NSE PLC received last week the Securities and Exchange Commission and National Assembly Committee, House Committee on Capital Markets. The market event was last week, Wednesday, December 9th, and it had members of the Securities and Exchange Commission and National Assembly members, House of Assembly, National House of Reps, I meant to say, in that meeting. The NSE PLC introduced to the House Committee, and the discussions focused on the following. Its establishment, of course, we know historically that SEC licensed the OTC market to fully operate in 2012 and commenced operation in 2013. WebTV was there when it happened. It grew from an association in the 90s to a public company as of 2017. It caters for both private and secondary ends of the capital market. NSE contains a large, diverse and committed community of authorized traders, participating institutions, issuing houses and custodians. It launched a good platform for SME funding, which of course we talk about every segment of the program, called NASDEP in April 2018, and also has a crowdfunding site, Venture Ramp, launched this year. The role of the NSD as a central infrastructure bridging investor and issuer are the following. It supports both small and big enterprises. It deploys various tools to ensure a safe and limited risk market. It provides trade guarantee fund, protects investors against a settlement default and enables a stable market. Has a role to play in the Investors Protection Fund. This fund was established pursuant to Section 197 of the Investment and Securities Act. It compensates investors who suffer pecuniary loss arising from the revocation of license, insolvency, or defalcation of participating institutions. It has T+3 DVP settlement cycle. All trades are settled through the Central Securities Clearing System, ensuring orderly and transaction completion. It also has its role in terms of supporting the development of a very robust wide market. Market surveillance is also part of what it does. Transactions on the market are monitored from the market pre-open, auction to closing. In terms of rules and regulations, as a self-regulatory organization, NSD has market rules that are approved by SEC, and you can check that on the SEC website. Now, for 2021, it's very interesting to see what the NSD is looking at prospective ventures. First, it's looking at open commercial paper. It's looking at the addition of sub-broker. It's also looking at setting up more guidelines for dealers. It's also taking into consideration equity crowdfunding, more of that. And we're also going to see the NSD private market, very interesting. And number 6 is going to look at digital currency. So 2021, if you ask me, it's looking very interesting for the NSD PLC. In terms of regulations, there are the rules and regulations of the OTC market, which are clearly spelled out. There are also penalties for breach of the OTC market rules. There are market maker rules, operational guidelines for equity-linked notes. There are rules on nominal transfers in the NSD PLC. There are trade guarantee fund rules, all embedded in the ecosystem. So definitely, the NSD looks good and on course to drive a more diversified market based on what we're seeing as prospects for 2021. Let's go on to the fact that according to the Nation newspapers during the week, the Senate passed the Finance Bill 2020, transmitted to the National Assembly by President Muhammadu Buhari 2 weeks ago. The passage of the bill followed the consideration of a report by the Senate Joint Committee on Finance, Customs, Excise and Tariff, Trade and Investment, and Public Procurement at plenary by the upper chamber. Chairman of the Joint Committee, Senator Solomon Adiola of Lagos West, in his presentation said that the Finance Bill 2020 specifically seeks to amend 17 key aspects of the extant laws. According to him, they are Capital Gains Act, Companies Income Tax Act, Industrial Development Income Tax Relief Act, Personal Income Tax Act, Tertiary Trust Fund Act, Customs and Excise Duties Tariff, Value Added Tax Act, Stamp Duties Act, Electronic Transaction Levy. Other areas amended are Federal Inland Revenue Service Establishment Act, Nigerian Export Processing Zone Authority Act, Oil and Gas Export Processing Zone Act, Crisis Intervention Fund, Unclaimed Funds Trust Fund, and Company and Allied Matters Act 2020, Fiscal Responsibility Act, and Public Procurement Act. President Muhammadu Buhari had in a later dated 25th November 2020 said the passage of the Finance Bill will support the implementation of the 2021 budget through key reforms in the taxation, customs, excise, fiscal, and other laws. The committee, among others, recommended the inclusion of free duty and levy for commercial airline operators in line with presidential waivers and approval already granted by the President in the Customs and Excise Tariff Act (CETA). On capital gains tax, according to Senator Diola, the Joint Committee recommended that returns should be filed per year on the 30th of June and 31st of December of every tax year. The committee recommended that the deductions provided for in the company income tax should, among others, be based on actual cost of the in-kind donation instead of the value, which may be different from what the donor actually incurred. He added the committee recommends that Section 25, Subsection 9 of CETA proposed be reduced from 25% to 15% of accessible profits to reduce the amount of deductions available for these voluntary donations made to states or local governments. The committee recommends penalty or fine to be disallowed should be restricted to those imposed by legislation enacted by National Assembly or states in the House of Assembly with the aim of removing the restriction that will be occasioned by the proposer in the bill with the aim of ease of doing business. The committee also recommends that Section 7 of the proposed amendments be deleted and Section 8 of the proposed bill is the new Section 7. On the CETA, that's Customs and Excise Tariff Act, the committee recommended as follows: the word service be changed to telecommunication in order to be specific on the section being targeted instead of leaving it open to all the services industries. The inclusion of the new duty and levy being proposed and presented at the public hearing in view of economic hardship by the Minister of Finance and Customs General of the Federation, in Controller General of Customs of the Federation, in order to improve the revenue generation by the customs services and reduce loss of revenue to neighboring countries. The inclusion of free duty and levy for commercial airline operators in line with the presidential waivers and approval already granted by the President is part of it. On the value-added tax, the committee recommended that goods and services should be exempt, should include commercial aircraft, engine, spare part, airline, in terms of the VAT that should be exempted, transportation ticket, hire rental on lease of tractors, plow, and other agricultural equipment or implements should be included as part of the goods and services exempted from VAT. On stamp duty, the committee recommended that the minister in charge of finance subjects to the approval of the National Assembly shall make regulation for the imposition, administration, collection, and remittance of the electronic levy. The sharing formula of the electronic levy between states and federal government with states will continue, with states taking 85% and federal governments will collect 15% on behalf of the states. On the Federal Land Revenue Service Establishment Act, the committee recommended that the service may deploy proprietary technology to automate tax administration processes, including tax assessment and information gathering, provided it gives 30 days notice to the taxpayer. On the most important one for the market, on the Claimed Fund Trusts Fund, the committee recommended, among others, that the Debt Management Office shall maintain a reliable database of all unclaimed dividends and dormant bank balances constituting the debt owed by the trust fund, which shall be verified and reconciled with the Securities and Exchange Commission and the Central Bank of Nigeria on a biannual basis. They will liaise with the relevant registrars of companies, deposit money banks, or the National Deposit Insurance Corporation, as the case may be, to make adequate arrangement for the repayment of the verified interest and capital obligations due to the relevant shareholders, depositors, or their regular beneficiaries. Those are very important things. And also, still on the Unclaimed Dividend Trust Fund, the obligation of the trust fund in terms of preparing and implementing the plan for efficient management obligations of the trust fund shall include setting guidelines, modalities, and other arrangements which may include, and like stated earlier, a sinking fund for the servicing of the interest and capital obligations of the trust fund. Those are very key things noted from the Finance Bill 2020. So let's look at week 50 performance of the NSD. What happened in the previous week? it's very important to take note of it as we continue to look at a very interesting market. The NSE Securities Exchange closed week 50 on a positive note year to date as the market recorded an increase in performance. NSD Securities Index year to date return loss rose by 5.19%. Stock volume traded year to date stands at 7,120,715,252 units in 101,461 deals, and total value traded is 12,555,217,549.28 in terms of value. So let's take a look at week 50. What were the key things? Energy securities, like we said earlier, achieved some improvement in performance. Closed the week with a positive on the NSI. NSI rose by 1.98% to close the week at 703.77 points against 719.53 points on the preceding Friday, which was December 4, 2020. In addition, week 50 saw NSD investors gain 10.58 billion naira in value. NSD OTC market capitalization closed at 545.41 billion naira compared to 534.83 billion naira in the preceding Friday, resulting from a positive movement of prices. There was a minus 23.34% decrease in the total value traded during the week as week 50 saw NSD investors trade a total of 266,740,229.25 million naira in value compared to 247,061,169 naira in the previous week. Total trade activity for the year is valued at 12,555,217,549.28. And of course, total volume traded during the week was 6,456,444 units compared to 1,464,771 units in the previous week, leading to a 240.1% increase in trade volume compared to week 49. Total volume traded for the year is currently 7,920,715,252 units. Let's look at the top traded securities by volume. The week closed with Central Securities Clearing System (PLC) (CSCS) ranking top amongst the 5 most traded securities by volume, and Afriland Properties as the 5th most traded stock by volume traded in the week. Top traded securities by values. Let's look at it. The week closed with NIPCO PLC ranking top amongst the 5 most traded securities by value, and Afriland Properties PLC stood at the 5th most traded security by value for the week. Advances for the week, 4 of NSD OTC stocks closed the week with a significant increase in value. NIPCO PLC, which currently holds a market capitalization of 12.76 billion naira, closed the week at 68 naira, representing a 9.68% increase from the previous close of 62 naira. Central Securities Clearing System PLC, which currently holds a market capitalization of 77 billion naira, closed the week at 140 naira, representing a 6.21% increase from the previous close of 135 naira 36 kobo. Niger Delta Exploration and Production PLC, which currently holds a market capitalization of 56.59 billion naira, I meant to say, closed the week at 311 naira 94 kobo, representing a 3.72% increase from the previous close of 300 naira 76 kobo. Friesland Campina Wamco Nigeria PLC, which currently holds a market cap of 131.08 billion naira, closed the week at 135 naira, representing a 2.27% increase from the previous close of 132 naira. There were no decliners in the week. That's very interesting. No decliners. One of those unusual weeks of interesting performance from the NSD. Hope to get that this week. Hope that continues this week as the year wraps up. But that's what we have today from the NSD and the unlisted securities OTC market. That'll be all for today's edition of the Market Review. You can visit our website www.proshenji.com to watch our videos, read our news stories and articles. Now, when you go to our website, go to the right bar and scroll, you'll see unlisted OTC securities. There we have all the stories and analysis and reports on what's happening in that market, which of course has the NASD PLC as the big player there. And tell us what you think. 2021, how does the unlisted OTC security market stand a chance to create value as an alternative financing vehicle in Nigeria? What are the prospects? Send your views and comments to news@proshenji.com or tag us at WebTV and we'll be glad to receive it and respond appropriately. Till we come your way again, it's been an eventful week discussing the markets. Thank you for watching. Have a nice weekend ahead and stay safe.